Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 5th of September 2025. So stocks rallied overnight for very odd reasons, really. So they hit a fresh record high in one or two of the indexes, but on the back of weaker employment data. So we had ADP jobs last night, just 54,000 job gains, slowest pace since June and well below the 73,000 expected by economists. So a bit of an odd reason to be rallying overall, but I mean, where the rallies come from is that we've got rate cut bets in September now up to 97% based on the CME Fed Watch tool. So as you can see here, just an absolute broad rally. Nothing much really out in terms of corporate news for Amazon overall. I don't know why that bounced back so hard. We had Broadcom earnings, which I'll get through in just a moment. But really, Texas Instruments and CRM, which is Salesforce, so the only two there that took a bit of a hit. ServiceNow probably following Salesforce a touch, those agentic AI service providers. So, but both Texas Instruments and Salesforce had weaker earnings. So Salesforce was after the bell yesterday. We covered that in the morning call yesterday morning. And they had fairly, well, not dour outlooks, but much softer outlooks on AI demand. And essentially the CEO making commentary there that softening AI demand and tech spend based on uncertainty in a weakening economy, which is obviously like the jobs numbers, that are weakening, has pushed that stock down. So bit of a tale of two stories, really. Well, the same story, two different ways. So, I mean, the broader market spliced those weaker jobs numbers up as, yay, we're getting rate cuts. But you sort of got to be a little bit careful what you wish for, because quite often, after the first rate cut, particularly on the back of poor employment numbers, you can quite often see, on average, at least anywhere up to a 1 to 2% down move or 3% down move over the course of a week after a payrolls number, which is tonight. And then over the preceding 3 months, you can see anywhere up to 16% downturn on average due to rate cuts. So, look, I mean, those averages go back, about 30 odd years. However, the zero interest rate environment's a bit of a new environment overall, and we've seen the market move a fair bit differently since 2011, and we've spent long periods at emergency rates, and we've done a hell of a lot of money printing. So, yeah, look, it will be an interesting payrolls tonight. Again, as I said, we're expecting around about the 75,000 mark for US payrolls, which is 50,000 under what it needs to do to keep up with immigration. And another factor as well is that we've been getting headline numbers that have been quite high, and they've been revised down quite savagely in the preceding months. So President Trump's already fired the Commissioner of Labour Statistics, and he's installing his own man there. So he desperately wants rate cuts. He doesn't really care about inflation by the looks of things. He just needs rate cuts down because they need to refinance somewhere in the vicinity of 7 to 9 trillion over the course of 12 months of that US government debt, which is obviously spiraling out of control at record highs. So, look, I would expect the number to be a little bit weak tonight, but given that rally and the switch back to very strong technicals now for the US, everywhere else is kind of floundering a little bit this week, but the US is brilliant at being bullish. They're the best at it, particularly with those Mag 7s. So yeah, look, it would be hard. I think it would be hard pressed for this thing to rally tonight. Overall, if they get a strong number, it's going to take those rate cuts off the board. And if we get a significantly weak number, I mean, people are going to have to start worrying about the economy. You can't celebrate job losses, but One interesting statistic that I probably bring up a little bit too often is we haven't had a negative jobs number in since December 2020. So, and I think the average down move is around about that 1.5% for the indexes when we get a negative jobs number. But there's not a lot of, there isn't too many negative jobs numbers, to be honest. So that data's, probably I'd take very much with a grain of salt. But yeah, we saw the Aussie rally back a little bit yesterday, as did the Nikkei. Iron ore was pretty decent, I think, overnight as well, up a couple of percent. So you may see, well, what the gold and silver miners probably will give away today. You may see sort of ground made up by the iron ore miners and the big boys. But China a little bit weaker this week. But we're essentially bang on flat, to be honest. I mean, for the week now, the Nasdaq's down 0.3, but everything else is really just absolutely spot on flat. So since in the last 5 days, so the Aussie has given back a fair bit of ground, but it's mainly the banks. And truth be told, they are, that passive flow into those banks from the ETFs and the index funds really pushed them to silly levels. So I don't think that's the worst thing in the world. So this is the last of the really big names in earnings. We've just got retailers left now. We had American Eagle from Sydney Sweeney fame killing it on earnings and rallying, but that didn't even include those very famous and, well, some say controversial, but they're not very controversial. Ads that have caused such a fuss. But I mean, great marketing. They've managed to get their name out there. I didn't know who the hell American Eagle really was until she came along in those ads, and everyone seemed to blow up about it. But yeah, so Broadcom, which is confusingly AVGO, stock code, they slightly beat expectations, and they slightly beat the fourth quarter forecast as well. But realistically, they didn't move a hell of a lot. I think they're up around about 1.2% in the day session. The earnings results have come out afterwards, and after the bell, and I think we've drifted off about 0.5%. So Salesforce maintained that down 4% yesterday, which it did after the bell, which is largely priced in. But look, margins continuing to go higher here. Gross profit margins up 3 basis points. Operating profit up 8 basis points. Margins 26 up 40. So look, they're a pretty lean, pretty lean operation. They're the only real competitor, but still a very distant second to Nvidia. But I think Google's starting to increasingly use their chips, particularly. They also did last night make an announcement on some competing chips to Nvidia as well. So it's been all good news for Google this week. Obviously, getting that antitrust lawsuit ruled in their favour, that really helped Apple and Google in the middle of the week. And probably that lawsuit really turned the market around. That was sort of Wednesday. And that was where we started to gain background. But look, as you know, we do MPC. We do a podcast, Bulls versus Bears, on a Friday. My prediction for this week was, plus or minus 0.5. So I've been pretty bang on, really, and always really saying that the big show is going to be payrolls tonight. So those revisions have been really heavy on the payrolls numbers. To the downside, if they start to front load some of those because people are fearing for their jobs at the Bureau of Labor and Statistics, because Trump definitely wants some weak numbers, so he can get rates down and start putting more pressure on the Fed. Who knows where, but this is a big risk number, and I think it will probably dictate what happens for the rest of the month. That was a pretty significant move on ADP jobs data. I mean, that's a weekly number. Doesn't really get paid too much attention to usually. So it's quite a savage move, and probably a bit of a reflection, that rally last night, that as I said in yesterday's podcast, I bring up seasonal weakness every year. I'm usually sort of on my own, and people sort of give me a bit of crap about it. But everyone was talking about it this week. You could see on social media that the September the memes were already coming out. It's a little bit early for that. I think that was about the third of the month, and then I think that's pretty much where they turned around. So I dare say there's a little bit of short covering happening overnight, and those momentum systems sort of probably caught some of the shorts off guard and pushed the market a little bit higher than what it should have done. But look, net now on the week, around about flat leading into this number is bang on. That's what usually happens, and until we see that data come through, well, realistically, you shouldn't be making any major calls either way, because, as I said, it could be a very confusing number. Anything too high, is good for the economy, but is not going to be good for the chance of rate cuts. Anything low may, if it's just under, it'll probably just push the rate cut argument harder, but it's not that bad. If it's negative, I think that rate cut then becomes fear about the economy. So, yeah, it's going to be a tricky one. I'm glad I'm not trading anymore and sitting on this side of the desk, that's for sure, because it'd be one of those numbers where I think you don't want to follow the initial move in the market, because it could do anything by the end of the session. Gold and silver, platinum, copper and things all came off pretty hard last night. A bit of a weird move in the US dollar, albeit very small, but obviously that chance of rate cuts going to 97% now. You would expect the US dollar to be falling away, and it's actually up 0.5% for the week. But look, and the US dollar being up 0.5% for the week, and these safe haven flows into gold and silver, also a little bit counterintuitive, to be honest. As you can see, these sort of growth commodities really not that positive on the week. So I think the broader theme is people are underlying worried about the economy, and while those lower rates do help that that Mag 7 and drag the rest of the market up, look, I think in the long run, think these commodities are probably leading the move overall. So, but yeah, very good performance from gold and silver this week. Probably due for a breather. Silver busted through 40 and spent most of the week knocking on the door at 42. I think it dropped back to about 41-ish. And look, periods of consolidation before a big move. As long as both of those things hold their ground, I expect them to go higher. I mean, it's a bit of an emotive thing in terms of gold and safe haven. And look, we're very happy long silver on the gold silver ratio, which over the last 50 years has only spent about 7 months as high as it is right now in total out of 50 odd years. Silver at the 50-year average should be around about in the high 50s. So, but one key point we made in the office yesterday was because at the moment we've got a gold silver structured investment that we're closing early next week, which is leveraged and high conviction, and people were asking, well, can it keep going higher? And the answer to it really summed up in one statement is, do you think that governments are going to show fiscal discipline and fix their budgets? And everyone laughed, because the answer is just definitely no. And if that's the case, then gold and silver just probably continue to rally, because Trump's going to need rate cuts. And as I say, we do, and I think he's going to be happy to let this economy soften because he needs rate cuts more than he needs the popularity of the economy going well. He can fix that down the road, but you're nothing sure once he's got his people in on the Fed that once he gets what he wants in terms of that refinancing at lower levels, they will print their way out of a recession so hard, and that's just going to be an increase in money supply, or M2 money supply just always ends up equating to another rally in gold. So it's, realistically, it's still we've been on this trade for 18 odd months now. done very well out of it. The gold miners are probably your best bet as it stands at the moment, with record margins against the gold price. I think the major gold miners, particularly in the GDX ETF, is they're producing it at $1,300 and selling it at $3,600. Pretty good business, I would have thought. In silver, these guys are mainly producing around about that $15 mark and selling for 42. And I think in the next 12 months, if silver gets on a run, I think you can see 50% gains or more in silver, just for it to return back to the 50-year historic average. So, those record highs back in 2011. If you go back and have a look at a chart on silver and see how hard it rallied after those emergency rate cuts and the printing and QE back in 2010, it's one of the steeper charts you'll ever see. So, and look, it'll drag platinum and palladium along as well. But that's pie in the sky stuff. There's a lot of things that need to happen in the meantime, and a lot of things that need to play out, including Trump's tariffs, etc., which are being contested. So, a lot of uncertainty still out there. I mean, here we are at record highs and in a softening economy. So, and into September seasonal weakness. So, I'm still very, very cautious. We're looking at we have trimmed portfolios across the board. Mainly just to have some ammo to buy in the dip, because these things do tend to bounce. The last 15 years, the 5 biggest down moves have all been, I think, on average down about 22% since 2015, so last 10 years sort of thing. And they bounced back to break even within 127 days on average. So, you've got to be sharp, you've got to be quick, you've got to be organised, and you've got to have some cash available, basically, to try and take advantage of the bargains. So, I embrace this seasonal weakness, because it's one of the few periods of the year where you can actually go shopping and pick up some quality. So. But look, guys, I think it'd be really risk off today on the ASX. If you've got any positions you're worried about, as I say, I'd be general advice only, but I'd recommend you be sort of taking some money off the table so you've got some of that cash pile, and be patient on the buy side. Hope everyone has a great day, a great weekend. If you'd like to listen to our weekly podcast, you can find us on Spotify, YouTube, and Apple Podcasts, Bulls versus Bears. Myself and Jonathan Takadena this afternoon. We'll wrap up the week in markets. But, have a great weekend, and we'll speak Monday.
General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.